Wait for it. Our next guest is the CEO of the #1 selling pot brand, #1 selling marijuana brand in California. He's actually in New York for a conference on how to make money investing in weed. Here he is, Adrian Sedlin, who is the founder of Canndescent. Good morning, Adrian.
Good morning, Stuart.
So first of all, this Canndescent is the brand that sells most weed in California. The #1?
We closed 2017 as the #1 selling brand of flower.
So what's that mean?
Flower is what we refer to in the industry as the bud.
The green leaf.
Yeah, the flower. So the leaf we don't smoke.
Not the oil, not the hashish, not the edibles, but the leaf, the green stuff.
Absolutely.
Okay, it's the best-selling brand. What's so special about it? What kind of high do you deliver?
Well, we have 5 effects.
I know. What is it?
So we sell our products under the name Calm, Cruise, Create, Connect, and Charge. And what we really did is simplify the category and make it more accessible so people didn't have to know crazy strain names. But then, like any luxury product, there's form and function, and there's things that differentiate our product from average product quality. Just like last week you had a wine guy.
Can they tell? Can smokers tell the difference between Calm and, what's the other one?
Charge.
They can tell the difference?
Absolutely. They're going to have a very different psychoactive effect.
I thought you just got stoned and that's it.
Oh, no. It's, we can actually...
I'm behind the times.
Yes.
Okay, let's talk about making money.
Sure.
You've got a conference here in New York.
Absolutely.
Lots of pot guys all involved. What you really need to make serious money is to have the feds say it's okay at a federal level, recreationally. That's what you really need, isn't it?
Well, descheduling, taking it off of Schedule 1, where cannabis is currently resides, would help greatly with capital formation. But I'd say as an entrepreneur it's created a window of opportunity, because right now the large cap public companies can't play and the historical activists can't really scale. So as an entrepreneurial opportunity, it's fantastic for companies like Canndescent, but eventually to get real access to world-class capital, low efficient capital execution, we do need access to the public markets.
But what about an outside investor? I mean, an individual who wants to make money in this new big industry.
Yep.
How do you do that? I can't buy stock in your company, can I?
No, we are a private company right now. So you can play the public markets. I would generally say those stocks have massive volatility, and some of them are trading at 101 times revenue. So buyer beware. I'd probably say if I were playing the public markets, I would focus on some of the ETFs, so you could diversify quite a bit.
Okay. You own what piece of this company?
I own about 30% of the company.
You've got 30% of the company, which is the #1 brand of marijuana selling in California.
Yeah.
Yeah, okay.
Smiling.
What's your gross revenues per year?
We'll exit this year at about a $25 million run rate. Middle of next year, we'll be at $50 million and close the year at about $100 million run rate. Oh. So we've doubled quarter over quarter the last 2 quarters. It's a once-in-a-lifetime category. It's an explosive growth category. If you think about alcohol, it's a $1.5 trillion annual sales category. Last year, regulated cannabis globally did 14 billion. So we're going to cut into that share, but at the same time, you have this explosive opportunity in a low beta stock. This is recession-proof. So you get growth with counter-cyclicality. Sign me up.
Okay, I'm walking away from this one. Mr. Sedlin, with Canndescent. That's intriguing. Thanks for joining us, sir. We do appreciate it.
Thank you very much, Stuart.
Coming in soon, okay?
Will do.